All right, welcome back. Quick update because I think it's important. First of all, not financial advice. Consult your licensed financial advisor. I'm not a licensed financial advisor. Do not invest in anything you're not willing to lose or lose sleep over. And be careful out there. I think I have personally deleveraged my entire account. Um, I think uh, I think things are gonna get super volatile next like month or so before March because Powell is planning on like 5 rate hikes or something like that in 2022. I don't even think they're going to get to one. And listen, back in 2019, from 2002 to 2019, US Treasuries, I mean, they held 15%. Now they're holding 64%. That's who's buying all of the Treasuries. That's insane. Um, where's the demand coming from? It's being monetized. That's what it's called, meaning they're just printing it and then buying their own treasury. It's like printing money to buy your own money to give it value, kind of like that. This was from the Wall Street Silver guys on Reddit, which is a huge community now. I haven't really been paying attention. It's like 180,000 on there. That's crazy, and they've been buying up all the physical metals, and they will explode. They just, you got to play the game. For the biggest rewards, you're gonna have to go through a lot of manipulation and dips. But when the reward comes, it'll be massive. It'll be the biggest reward ever. So just hang in tight, but make sure you don't get shaken out, especially if you have a leveraged account, because that's what they're gonna try to do. Maybe they'll do like some BS cyber attacks or whatever, or maybe something does go kinetic. Let's say Eastern Europe, and then maybe the Pacific. And you guys know what I'm talking about, right? Anyways, um, here's another thing. Here's global markets. I mean, they're selling off today. This was expected. I put it out in my private group all last week. I was like, I'm buying more VIX. I'm buying more, defensive ETFs to put a hedge on my entire account and possibly make a nice profit if the market sells off and this is a dead cat bounce, which I pretty much said I think it is. And I've been saying that in the past few videos. We might get a little rebound, a little dead cat bounce, but then it's going to sell off until Powell or central bank capitulates. Now it's not even just about the U.S. market. In Europe, I guess they raised rates a little bit, and shit's like blowing up already. And they can't do it globally. We're looking at an average of like I don't know. I think in the U.S. real CPI, real inflation is like 14%. Europe, it's like the same thing, or more, or a little bit less. It depends which country, right? It doesn't matter. It's like all around 10% if you average it out, maybe globally. That's insane. That means 10% year over year. You get a pay cut essentially. The prices of everything's going up. Packages keep shrinking, and this will continue and continue, and shortages will continue. And there's all kinds of other reasons why this, I believe, is going to accelerate this year, especially. But it'll probably get really bad in 2023 and 2024. And I think the managerial, the manager class of this world is actually starting to freak out. Like, be careful what you wish for because you might get it. And they're I think they see some models and they're like, holy shit, we're going to lose control of everything. And they will. And I've said this for years. I mean, play games and they're going to find out. Like, all right, so here's S&P 500. And I understand what they're doing. They're trying to manage billions of people before the music stops and the global just on time shipping Ponzi backed by a Ponzi falls apart. You guys have to understand everything in the grocery stores, it relies on credit. And if the credit markets freeze or just, blow up, that's it. Like, there's no more food coming. Like, there's no more gas. Yeah. So that's a possibility. So they're I don't know what they're gonna blame it on, but it's just gonna happen. I'm hoping for a slow motion decline. I think they should as well, and not play games. Uh, so here's the thing: they can't let the stock market fall too much, because if they do, the credit market freezes and then it's game over. They can't print too much or make it obvious, because inflation's really rampant, and then everyone's getting mad anyways. But either way, both is going to happen. So they have to like walk a tightrope, the central planners. Meanwhile, politically, people are mentally ill on both sides, and it's going to get wild. But there's some air pockets beneath these equity markets, and they're going to get filled, the air pockets. You look at the Dow, nice drop around 32,000, maybe 31,000. S&P 500. It's on support on the 200. This is a 12-hour chart. Let's go to a weekly. By the way, that was a weekly for the Dow I was showing. Here's the Dow. I think it'll take out the 100-day. Or is this the 50? 52 week. But I see a nice air pocket all the way down to 4,000. That's a huge drop. I mean, that's an 18% drop from the all-time high for the S&P 500, which actually that's what I've been saying this entire time. Maybe a 20% drop. We might be able to handle that. And what that'll do, it'll be like a pressure relief valve if equities sell off like 20% or something across the board. NASDAQ probably more. On inflation, and it'll buy some time, maybe 6 months, maybe a year. I doubt it, because as soon as it drops 20%, guess what they have to do? More QE. Right now, they're threatening to take away the QE and reduce the balance sheet of the central bank. Here's a NASDAQ. Here's what's really going to get slammed, in my opinion. Because NASDAQ's in like massive bubble. Again, like bigger than 1999 2000.com. Easy drop to the 200 week. Oh, this is a 3-day chart. Hold on. Oh man. Well, let's see what a 20% on NASDAQ looks like. Yeah, around 13,000, 12,900, around that area. But honestly, I think the NASDAQ should fall more, while the Dow holds up better, and so does the S&P 500. Like a 30% drop would actually be more realistic for the NASDAQ. Or should happen to bring back some sort of equilibrium. By the way, this is 2020 back here, just to show you this massive bubbly rise from the COVID dip. It went up from the COVID dip. The NASDAQ went up 143%. Look at some crypto shitcoin. This is an index. It's not even, That's how insane this is. All right, look at this. Well, they gotta correct this. They have to let this correct so inflation drops a little bit because it will. But they can't let it correct too much because again, the credit markets will freeze and then they'll open up the repo window and then flush it with cash, and then that's how credit doesn't freeze, but they do a release valve on inflation. Now let me tell you why. Here's why the Nasdaq is going to drop. Here's Tesla. Tesla looks like it's got a nice correction already from its all-time high. Since Elon sold, it's down 36% to its low. Currently, it's sitting at a 26% drop from its all-time high. I think it could retest $500-600 around that area. It should during this correction. Here's ARK Innovation, essentially holding every risky tech bubbly stock, mainly Tesla and everything else. It fell from its all-time high all the way down at its local low. It fell pretty much 60%. Currently, it's sitting at like 54 or 55%. I think ARK might be the canary in the coal mine, which... So if we're looking at another like 10 to 15% drop from the all-time high to take us to that overall 20% drop correction, I mean, ARK should easily revisit $48. Currently, it's at 72. And that's what'll cause the panic and then plunge protection, and then we will go from talking about 5 rate hikes and taking away and tapering and taking away stimulus to more stimulus and UBI checks. But they need some sort of event to justify doing that all over again. Something's gonna happen next 2 months. Something big. I don't know. Look. Let's take a look at Facebook here. These are weekly charts. I zoomed out, so you guys can see it. Let's take a look at Facebook, Meta, whatever. This platform is essentially just a bunch of old people on there arguing and spying on each other. And every once in a while, younger guys get a little spicy on there who aren't very tech savvy. That's about it. And then they just collect data on you, of your, like, what your interests are, I guess. I mean, Facebook is clobbered. Basically, they're losing users. And I don't think advertisers want to risk money during these times. And they're not getting that engagement, apparently, on their platform. And like Richard has said, I mean, the metaverse or whatever, it's no different from playing video games for the past like 10 years. I mean, this is the metaverse. You're watching me online, right? That is metaverse. So I mean, it's on support right now, Facebook. I would love to see this sucker drop. Let's say so if the market corrects, I could easily see a drop to $160. I don't think it'll ever make a new all-time high ever again. It's done. Like, nobody likes the platform. Basically the only people they're getting are like globally from second world and third world, right? Maybe. But as hard times come, I mean, and plus the censorship, what is it for? Really? Just spy on your old friends and neighbors. I don't know. But this is indicative of the like a new .com bubble, right? So this is why I believe the Nasdaq is going to get hit harder than the rest, easily, because because their earnings, it's all future projected. Their PE ratios are completely pricing in 10 years from now, and it's not even based on real earnings. They're not like real companies producing, manufacturing real things. We're going to go back to a society and an economy which has to rely on manufacturing, agriculture, and commodities and energy. It's not going to be stay at home lockdown stocks like we've had in the past 2 years. People bought that trade. That trade's over with. Now it's deflating, that bubble. Unless, people really do go into the pods and like eat bug sludge and, I don't know, put on their VR goggles to escape reality because it'll be so horrible. But I don't think that's not going to happen. I mean, we're going to have power outages. Um, yeah, so the dollar, let's take a look at that. This is a 4 hourly. Let's take it to a weekly. It had a nice little bump up, right? That knee jerk reaction every time the market sells off is because margin calls and people have to raise and companies have to raise cash as a defensive mechanism. And they need it to pay their margin debts, right? And their leverage. So they raise cash first. But in the macro, the dollar isn't strong. It's a DXY. It's a basket of fiat currencies. All fiat currencies are falling against real things like lumber, metals, commodities, energy, food, all that stuff, right? But I do see a retest of the 200-week moving average, which will take us down to 94 handle, and then maybe we get a nice correction in the market. Maybe it pops up a little bit again, and then when the central banks capitulate again and take rate hikes and tapering off the tables, and then they do stimulus again, it's going to break that 200-week moving average, retest 91, maybe even blow through it. I don't know. But it's going back down, and it's going to make new lows eventually, the DXY. That's when metals, gold and silver, and mining stocks are just going to rip and not stop. They're just going to keep going up and up and up, just like back in 2010 and 11. So why is all of this happening? Well, because inflation is noticeably getting worse, and they have to do something about it, or at least look like they're trying to do something about it. But as we see here, I mean, the 10-year yield, the interest rate on the 10-year is almost at 2%. And what have I said for the past 2 years? If it gets back up to 2%, that's when shit starts blowing up. I've literally been saying that for 2 years. It's at 1.9, so one more spike. So I don't know what. That's why I'm saying the market's calling Powell's bluff. And honestly, guys, if they were serious about stopping inflation, if they're serious about it, how high do they have to raise rates? And how high would the natural organic bond market take them? Minimum, I believe, personally, I'm just guessing, 25%. Not 2, 25. Why? Well, if the CPI, and the CPI data this week is coming out, right? Tomorrow. If we're looking at like 14% real inflation, or 15, something like that, or even 8%, like how they say, or their models are showing 6 or 7. But if you look at the old models, it's at like around 14 or something. Well, you would need interest rates higher than the inflation rate, at least 5%, for anyone to even buy bonds, right? Um, and to rein in, because they're behind the curve, 25%. Now, Volcker back in the day raised it to some insane level, like 40%. We can't do that because we can't even do 5%. That's what I'm trying to say. Like, we can't even handle 2%. Everything, the bubble starts popping at 2%. So they're going to capitulate. But I think they need the market to sell off and get a nice 20% sell off in the markets. Why? Because that's a deflationary event. That's kind of like a deflationary tool, I guess, or manipulation. So if the markets sell off 20% from the all-time high, that'll rein in inflation for a little bit, 6 months or something, hopefully. And then they'll do QE and all that again, and then inflation picks up again because there's a delay. So towards the end of 2022, going into 2023, inflation picks up again and goes even higher. And this is called stagflation. This is the game they're going to play. Will the stock market rebound and make a new all-time high? I don't think so. I think they just want to keep it going sideways or something. Or I don't know. And then I talked about last video. If the stock market falls a lot, will everyone start pulling their stock market gains out of the market and go shopping and start hoarding and buying things up in the real economy? Which I have not heard not one person talk about that. That's one of mine again. That could cause inflation on top of everything. Now, I'm not even talking about the global situation because I want to make this a short video. I'll talk about that maybe in my next video. But this is the situation at hand right now. Gold, oh no, this is oil. Let's talk about oil. It's important because oil is a barometer of inflation. And before the mortgage-backed security crisis crashed in 2008 and 9, well, in 2007 or right before it, let's say 6 months, something like that, I remember oil went up a lot. And then the markets dumped, right? Now, they need oil to come back down because, I don't know, if the national average in the US is $4 to $5 a gallon, that causes on its own a depression in the economy. Everything runs on crude. Everything. Even your EVs. So they need a market dump to so they could push oil back down. So they could push down inflation and all this to cause kind of like a deflationary event. And then for the midterms for summer, so pitchforks don't come out, they're gonna do some sort of UBI or stimmy check again. I don't know what they're gonna do, but they've gotta do helicopter money again. So it's ebb and flow, or I don't know what's a good analogy. They'll put it's like build up pressure and then release valve, build up pressure and then release valve. That's what they're trying to do, I believe. But in the long run, inflation goes higher, and the cost of living goes higher. But I don't know, guys. I don't know how they're gonna manage all this, to be honest. Here's gold. It's trying to break out. It should break out. I still think they're gonna do one more dump in metals. One last dump. Now, the market overall, here's the NASDAQ. This is a dead cat bounce. This is all a bunch of short covering right now. Open interest on metals, I believe, has fallen recently on silver and gold. I believe silver is going to actually make gold break out, and then they're just going to feed off of each other as they both go higher. But here's the thing. I do think there's one more drop in store when we get margin calls for the final correction in the stock market, which I believe is going to happen before midway into March. The only question is what's going to be the blame, the triggering event. You know, it's got to be like an excuse for all. I don't know. We're going to find out. Let's what else? Um, let's talk about. Here's another thing. This is they want Powell out. They're trying to get rid of him. This is like political. Uh, so read this. Apparently he was trading. Now why would they throw their own guys under the bus? Well, there's always people fighting for power at the top. There's always infighting. It's not like one club and they're all really bestie friends. Um, when things get tough, um, they all stab each other in the back. I mean, if I was him, I would be glad to leave. To be honest, I wouldn't want to be. That's what the only part. The only reason I think Powell might not realize how big of a trouble he's in is that he's still there. I would have like resigned. I would have been like, "Oh yeah, this is bad. We're all trading behind the scenes, and we shouldn't be doing that. And I'm just gonna step down because I failed." I would completely just step away from all of this because I would not want to be the man um, up on the podium as all of this unravels and folds. So, but I think they're trying to get rid of him to put in someone like Neil Kashkari, um, who's more, or maybe someone else who's more of a Keynesian and who's willing to print even more. And that's insane. That's so bad for the dollar. So bearish for the dollar. And that's what I believe this is about. I like these visuals. This is a visual, the state of the world's debt. Japan is the highest, but you know what? It's a small island, or not small. It's a big island, but their population, it's mainly elderly, but they have a high savings rate, and they've already had their boom and bust cycle in the 90s with their real estate market. At one point in Japan, it was like all the real estate in the late 80s, early 90s was worth more than like the entire US or something insane. So they've already gone through their cycle. I believe China is about to go through theirs, and so is the rest of the world. Europe, Canada, Australia. We have a housing bubble across the world, and then our debts are all going to be like Japan's, like debt to GDP at 250%. The only difference is what is your the only difference is that's going to make a difference in the quality of life will be what is your net import and export, what is your debt, what is your manufacturing base, like what size is that of your GDP, and uh yeah, I don't know, like credit, how much debt did your public take on, how much savings do they have. So the US is technically, I believe, around 140% right now. It's less than Japan. um but for example, like Greece has less debt than Japan, but Greece is like just completely collapsed. Japan's fine compared to Greece, but so what it really comes down to is how productive is your society? Is your nation? How productive? How competitive is it on a global stage when it comes to economics? But here's the thing: the global just-on-time shipping, globalization, which is based off of this financial derivative bubble, it's coming to an end. So the nations who produce the most will probably and have the least debt will come out on top. Unfortunately, that's not the West. Russia does not have debt, and I don't know how big their manufacturing base is, but it's probably decent size compared to their population. And China has a ton of debt, but they have a lot of manufacturing base. But they have their own problems with demographics. Like there's like 5 dudes to 1 chick, like that. That's why I think they're gonna just do the imperial thing because they gotta send all their men out. They gotta send all their men out to do the conquest, right? And hey, I mean, they who knows how far that's gonna go? Like that's just a problem. Um, Credit market cracks could spark doom loop with stocks. Yep. Let's take a look at the news a little bit. Bridgewater touts Chinese assets as PBOC diverges. So this friendly kumbaya with China is kind of breaking down now, since the world is, I believe they're looking at their models. Oh, and the man himself, Soros, came out against them. You could see everything breaking apart. This is what I talked about for years. They're gonna try to do this global governance, but it's gonna fall apart when things get tough because everyone's out for their own and survival in the end. Because that's how bad shit's gonna get globally. So, look, I mean, they're putting robots on the border now, and this is Team Blue doing it. See how things. There is no Team Red and Blue. It's the same thing, guys. Alright, so what else is going on? Let's go to the next page. I am not gonna edit this video. I don't have time. So there's gonna be silent moments. This is why they talk about you can't eat meat anymore. It's bad for the climate. Really, it's because they broke the supply chain with the lockdowns. And I don't know, guys. They just want less people. That's all it is. And they can't feed you. You know what? There is no scarcity though. If everyone started a little like garden in their backyard and bought a goat and a chicken, it'd be fine. But most people aren't willing to do that. They want to just go and buy Big Macs with, from these industrial farms pumping cows full of hormones. And hey, I mean, if you're not contributing to society to make it to a better place, maybe you should be eating bugs. I don't know. So corporate earnings in the US, this article says forget about Facebook. I do think corporate earnings are going to be weak. And they're like happening now. They're coming up this week, next week, and the week after. And if they're weak, I mean, the market's just going to fall. And Wall Street's fine with the market falling right now. Why is that? Because they're calling Powell's bluff on raising rates and ending stimulus. They don't want the punch bowl taken away. Look at this. The ARK Venture Fund will also limit investors' redemptions with longer lockup periods. Like she's trying to keep her fund there's a run on her fund. People want their money back because they're seeing their portfolios get wiped out. Oh, by the way, this little convoy joyride. Like, here's the thing. It's good in the sense that the common blue collar man had enough of all the, the tyranny essentially, and it's about like digital passports and forced things inside your body, which is hell. But they can't really do that. Now, will they try? Yes, they've already tried. They've already failed. And now people had enough. Like, so this little joyride, I believe, is gonna it's gonna go away, and they might get the blame. They're gonna try to blame the food shortages, the inflation on them. That's the problem with this, right? Because that's what they're gonna do. But in reality, this was happening anyways. But does this kind of help break up the supply chain? Yes. Now here's the thing, guys. I don't know how many trucks are even involved. Um, I don't think it's 50,000. I don't think it's that many, but I do see a lot. Like now, there's a lot of tractors as well. But you know what? It's the winter. They're not really doing anything anyways. But the trucks, like, if they break their own supply chain, I mean, it'll be possibly irreversibly damaged, like irreparable. I can't can't talk. They're not gonna be able to repair it, so it'll be irreversible damage. Like, so I get it. People are upset. This was gonna happen anyways, and it's good because it's showing that people had enough and they're backing off and they're gonna stop with all of this nonsense. That's good. But with every good comes the bad, right? They're going to get the blame for the supply chain breakdown, this and that. So you got to watch out for that. So I see them stopping soon, or they should, or it'll die down. Now, the next time they're going to do something like this, it'll be because, gas is $10 a dollar or a Canadian dollar or something. Life will be just so difficult. But you know what? I don't think this really solves anything by going into the cities. It does solve something, as in they're showing power and strength that the majority of people had enough and we're not going along with this. And that's true. And it's happening. And this has gone global now. So there's a global awakening. It's not a reset, it's an awakening. And now the ruling class know, and now they're backing off. And you're going to see this play out, that they're backing off with all this shit, all the medical stuff, right? And the passports, the digital this and that. People don't want it, and if they keep doing stuff like this, then they'll back off. Because, I mean, really, that's really just a very small group of people at the top trying to manage everything. And when the masses do shit like this, it proves to everyone that they're in control, and they really are. I had enough. I'm gonna digress from that. All right. So there is you do see power shift from the west to the east now, meaning from Europe in the U.S. to the east, right? And that's happening. In the Middle East, they're doing deals, oil for yuan and rubles and stuff, and so they're de-dollarizing. So key events this week, all eyes on the CPI. CPI comes along on Thursday. Oh, okay. So it comes along on Thursday. I mean, they really fudge the numbers on these, but I think it's getting to the point where they can't even do that. Or even with the fudge numbers, it's coming out higher and higher. And look at this. Tyson Foods, beef prices jumped by 32% in a quarter, with chicken up 20% and pork 13%. Listen, I've been going to the grocery store and there's less and less meat. I bought the last, like, puck, or not puck, but organic. Oh, and here's the thing, I only buy organic beef. And people wouldn't buy organic beef because it costs more. But now even that is people are buying organic beef because they can't buy any of the cheaper beef with like all the hormones. So the organic beef's disappearing now. Like, it's happening. I mean, just pay attention. Oh, I've gone to retail stores. It's like nothing in the stores. I went to a store that get no, I was looking for a jacket, and they get the leftover jackets, and then they sell them at a huge discount. And I sometimes they have real nice jackets that are like hundreds and hundreds of dollars, like a $400 jacket for like $200. And I go to this store, and it was empty. It was like nothing. They had no jackets. It was insane. And there's no surplus in retail. Now, you're going to start seeing a lot of retail stores and corporations starting to hoard. They're going to buy everything uh, ahead of time so they could fix their margins. Because last year, they didn't really raise prices because they actually believed inflation was temporary. Well, it's not. So now they're starting to buy more and more inventory, and they're starting to do the hoarding. The retail stores and the companies, and then they're going to raise prices, and then guess what's going to happen? The consumer, the buyers, the retail consumer is going to do the same thing, and then that inflationary perpetual death spiral starts happening. um but hopefully we get a market correction. They could buy us another like 6 months towards the end of this year. I'm actually hoping for it because, guys, like, listen, what's coming down the road is going to be tough times, and it's not going to end for a very long time. It could be decades. So, you know, like, buy your metals, get some hacks because that outpaces inflation, and hopefully you'll have enough to buy a homestead or something. Lagarde let Europe's genie out of the unintended consequences bottle. He raised rates a little bit. So that's why the DXY didn't perform as well. Um, what else is going on? What else is going? There's a lot to talk about. Bitcoin should fall with the rest of the market, by the way. I've never seen a market like this. Goldman sees shortages of everything. You name it, we're out of it. That's crazy that they're admitting that. If it's oil, gas, coal, copper, aluminum, you name it, we're out of it. By the way, so the current administration and in Europe, they want to do some sort of green infrastructure package, new reset. How in the hell are they going to do that when we already have commodities through the roof? Because that's going to cause commodities to go even higher. To build it, you need more mining. You need more commodities, which is another bullish reason to be in mining stocks in the resource sector. By the way, I don't just trade like or buy like gold and silver mining stocks. I buy like I trade and buy stocks in all commodities and resources. Um, so I think this decade will be the decade for resources and commodities. It'll be a super cycle, and I said that for years now. Last year we saw it. I mean, lumber went up, copper went up, aluminum, everything went up except gold and silver. Um, but eventually, it's all gonna keep going up and up and up. Like it's just never gonna end. The most undervalued is gold and silver right now, and I believe one more dump, and then that'll be your last buying opportunity. I could be wrong about that. What if it does break up? So I'm. It's not like I've sold all of my mining stocks. I just deleverage. Um, and I sold some, but I still have my core positions and everything. But if there's one more dump, just like we saw in like 2020 for the COVID dip, um, that'll be your last dip buying opportunity, in my opinion, and a great opportunity. All right, guys. I'm going to leave it at that. Smash some likes. Please share my videos. It's the only way my channel grows, and I'll continue to make videos. Leave anything in the comment section. Any comment. It just helps, the algos, I guess. Go to my other social medias, please. It's not that big of a deal. If you want to be part of the private group, go to my website. One-time fee, and then $20 a month. And it's a great community. Until next time.